With the Wednesday stock market session closing for the US, you can see the S&P 500 is pretty much on that $7,400 target that Jason has been talking about as a potential cycle top. Now, it has ran super strongly out of that March low. We're now 1, 2, 3, 4, 5 straight weeks up. And if I double click on the Gann swing indicator and I show a bar count over 5 and clean my chart up, you can see whenever we see 5 or 6 weeks up, it kind of puts a lid on the market a bit. The market can obviously still grind a bit higher, but at that point, it's more of like a rotation of money rather than just money flooding into the market, if that makes sense. Obviously, in 2024, when the bull market was still young, we would see a short pause, a correction, and the market could still shoot off higher, which I'm not ruling out. Like you can see through here in 2023, we saw 6 weeks up, market pulled back, 5 weeks up, market consolidated and kept going. So it doesn't have to mean the cycle top is in, even though we're approaching one of those targets that Jason's identified a possible cycle top for, based on fib extensions, etc., etc. You can obviously go look at his X posts and YouTube videos for that. But just in my testing, when we start to see these 5 or 6 weeks up, the market will typically at least go sideways for a few weeks as money rotates between stocks. So you might see 1 or 2 stocks pop off, but it won't just be like a buy anything and get rich type of environment anymore. That environment was in the last few weeks. But of course, the market can, after a bit of a consolidation or correction, keep going. Or we could print, another 4 weeks up. No one says we can't see a 9-week upswing and push into this +1 standard deviation band, which is a potential area to expect major resistance, as you can see here through September of 2025. We pushed into that band. The market still grinded 5% higher, but that was pretty much it. Like this strong move from April until, when we first touched the band, April until September was most of the money to be made. It went from 4,700 to 6,600, and then from September until March, we grinded from 6,600 to 7,000. But let's have a quick look at the DXY. Pretty much nothing has changed in the recent session. The USD AUD chart hasn't really moved. USDT dominance has moved back up a little bit. Bitcoin on the monthly is still below the 382 Fibonacci. Bitcoin on the weekly has pushed into the 33 fair value band. You can see we've actually pushed into it now. 7 days up still. It looks like the close is probably going to be below the high of the previous bar, which isn't in itself a bad sign. But the pickup in volume with a weak close, however, is a bad sign. If we close under the midpoint of the bar, if I draw a quick fib retracement, you see the midpoint of the bar is at 81,790. And if we close underneath that, especially with the increased volume compared to yesterday's bar, where we did close above mid-bar, just with a quick visual glance, let's verify that. It was 80,800 was the... Yeah, so we just closed above the 50% yesterday. So coupled that with 7 days up, the stochastic RSI maxing out 89.99. We can obviously sit stochastic RSI overbought for multiple days, but if we start to get a trend change underneath this $80,700 level, which pretty much lines up with turning the daily swing down, and price breaks back into consolidation, this will be considered a failed breakout. And if you remember the age-old saying, don't trade breakouts, trade failed breakouts. Now, on my 4-hour Elliott wave count, you can see in this pink structure here, we have technically completed a 5-wave count. From the 5th of April, fourth time breakout at 67k, we've seen a wave 1 push to 74k, pull back to about 70k. We've seen this wave 3 push to about just shy of 80k. Even though the Coinbase chart, this was a slightly lower low on every other chart, basically, Binance, etc. It was, sorry, not slightly lower, slightly lower high. It was a higher high. We saw a wave 4 pullback to about 75k. And then we've seen this wave 5 extension. Now, if you do remember me saying, as soon as we broke above this double top at 79.5, the top could come at any moment because we're in wave 5. Now, if I hide my pink count here to clean up my chart a little bit, you can see we've seen a potential 1, 2, 3, 4, 5 on this black count, and that is the alternate wave count, where we've seen this being a wave 2 correction, my 5-3-3 corrective pattern. It's a rarer corrective pattern than a 5-3-5, which is your typical ABC structure, but it can still happen. And then we've seen a 1, 2, 3, 4, 5, meaning we're setting up for a slightly higher time frame wave 4 correction. And if this wave 4 correction can hold above this double top at 79.5, we could still have a wave 5 to go. Now, obviously, if we reset the daily swing, we're only 6 weeks up, so next week could still push higher and give us 7 weeks up. I'm not ruling that out entirely. But obviously, with price pushing into this 200-day moving average, the probabilities of a successful long trade here get lower and lower. And if I scroll back in history, you can see Bitcoin has never poked its head above the 200-day moving average since breaking down from it properly with closes and lower highs in a bear market. You can see we got this perfect test in March of 2022 when we actually broke back above it, consolidated a higher low. That was the beginning of the bull market, meaning that if we do get another leg up, it either could be this time is different, we get a bit of a fake out, maybe we get 1 or 2 daily closes above it and then price comes back underneath it. But if we do start to break above 83k and consolidate, let's say between 83k and 90k, then we get a higher low. Maybe, just maybe, that is the beginning of the new bull market, and we've seen the shortest bear market ever. If I scroll back to 2018, you can see the same thing. Once price breaks underneath the 200 moving average, we get closes and lower highs. Price does not break back above it until the new bull market begins. Obviously, we can get a bit of a fake out in a bull market, like a bit of a bear trap, aka COVID. The exact same thing happened in like 2023, September, August. So for now, I will probably wrap up the chart analysis here for today so I don't bore you guys out. But one thing, actually, before I go, we can see that if you remember my last video, we saw an ABC move, and in this wave C, we have a 5-wave internal structure. So if you remember my initial pink count, if I bring that back up, we have technically seen a 5-wave structure. So this C wave is technically complete if it is a C wave. Now, obviously, if you remember what I said earlier, if we start to see a higher time frame pullback and a higher low, ideally above the top of this potential wave 1, so a higher low above, say, 76.3, and then we push again and break back above 83k, maybe this is the first leg out in a bull market, because that would be a higher time frame wave 1. Now, keep that in the back of your mind, but for now, If we have a look at the S&P 500 Fear and Greed Index, you can clearly see we're in greed now. And a lot of the oscillators are actually in extreme greed. So if I pull up the timeline, the last time we saw extreme greed, or greed turning into extreme greed, was May of 2025. So if sentiment cools off a little bit, maybe we could see one more push where we actually sit in extreme greed in that July phase. But yeah, so potentially, if we see May of 2025, when we first start to see greed, price can still grind higher. But I would just be on the lookout for extended periods in extreme greed. So for now, trends are up, respect the trends. Thank you all for watching. Please like, comment, and subscribe. But I am absolutely getting cautious on Bitcoin where it is now. Goodbye.